IFRS 9 provides guidance on all aspects of the accounting for financial instruments. No, not those kind of instruments. Nope, not those either. Again, not that kind. Okay, this is getting ridiculous. Those aren't even instruments, they're implements. IFRS 9 covers all aspects of the accounting for financial instruments. So, what exactly are financial instruments? Meaning those items that might be in the scope of IFRS 9. Financial instruments are defined as any contract that gives rise to a financial asset of one entity and a financial liability or equity instrument of another entity. And the objective of IFRS 9 is to establish principles for the financial reporting of financial assets and financial liabilities that will present relevant and useful information to users of financial statements for their assessment of the amounts, timing, and uncertainty of an entity's future cash flows. Financial assets include cash, an equity instrument of another entity, certain contractual rights to receive cash or another financial asset, or to exchange financial assets or financial liabilities, certain contracts that will or may be settled in the entity's own equity instruments, as long as they meet specific criteria. Financial liabilities include certain contractual obligations to deliver cash or another financial asset, or to exchange financial assets or financial liabilities, certain contracts that will or may be settled in the entity's own equity instruments, so long as they meet specific criteria. Now, you might be thinking that all of this financial instrument stuff is really only applicable to financial services companies. That couldn't be further from the truth. While it certainly applies to them, it also applies to all other entities. Pretty much all entities have some form of financial instrument, whether it be investments, loans, etc. Even accounts receivable meet the definition of a financial asset. IFRS 9 states that its guidance should be applied by all entities to all types of financial instruments, with certain limited exceptions. A summary of those exceptions is on the screen now. This is just a summary. IFRS 9 includes more detail on each of these exceptions. For the financial instruments in its scope, IFRS 9 includes guidance on classification and measurement, impairment, hedge accounting, and derecognition. It is important to note that several other IFRS standards also include guidance on financial instruments. For example, IAS 32 covers presentation of financial instruments, and IFRS 7 covers disclosure of financial instruments. Let's begin our journey to explore the accounting for financial instruments.